and trying to get to the share. There we are, share screen. Right, welcome everyone. I hope you are all doing well. So it's Monday. Some of you will be in the 7-day free trial group. So I hope you're going to have good fun this week and enjoy the sessions, lots of different things. Paul and David on this morning, and Sarah Jane's very good in the afternoon on the basic Be Your Own Bank. So really good tea time session. And Les in the evening, and then Brian Knight with his Q&A for beginners and advanced. I shall be on tonight because I want to ask him some questions about advanced protection on CTrader, which is the alternative platform to MT4. And then when you join, you'll come into our Ninja Forex Traders group and go through the units, and that's where we suggest you start. And the first thing we always do, as you know, is look at our forexfactory.com. It's a bank holiday in New Zealand today. That's marked in grey. There's no other red flag news, but quite a lot going on this week. And bank holidays at the end of the week, which affects Europe. A lot of people take this week off over here in mainland Europe. I'm just outside Paris. So I know some people have actually gone away this week, although they probably technically shouldn't be traveling. So that's Forex Factory. And then come over to, before we come on to the scanner, come into im.center, and this is where you will find all the strategies, the products, and the academy, and Go Live, which is the TV with 80 or so top educators. Barley Granville is the one that we follow for Be Your Own Bank. You can see me now at #1 with over 11,000 points. I've just finished going through the academies. And I wish I'd started it earlier, actually. It's a bit of a slog at the end, but it's fantastic. And obviously, if you're fairly new, it took me quite a while. They're only 5-minute videos to get through series 1 and 2, basic sort of foundations of Forex, and then a little bit, tiny bit more advanced there. What are pips and candles, and some of the indicators, and then it gets some of the old Chris Terry videos are fantastic, but they're about 45 minutes long or so under the series 300 and 400. So when I got to the 400 series, the market geometry ones are very, very good. And this is why I wish I'd looked at them earlier, because often we've been looking recently at failed scans, and he actually goes through on some of these how to check whether it's a good scan or not, and why some scans aren't as good as others. And that's using some settings on the Bollinger Band. So I'm going to show you that today. And then he goes through how to use the Harmonic Scanner. And then these are shorter ones where it's what's a VAT pattern, because they're all based on different retracement values on the Fibonacci. So I am going to go back through those again and again, because I don't want to learn to draw them myself. Why should we, when this education gives us the opportunity? You know, they create them all for us, but it's really great to understand. And then Harmonics, the deep dive, there's more in there on how he looks at when to get into the trade on the scanner. So they are a bit longer. And then the shorter ones, what's a Gartley, butterfly, and sharp pattern. So very, very good indeed. And you don't have to go through series 1, 2, and 3 in order to go through these. It's just, it depends on your trading style. If you don't use the scanner so much, then why would you look at these? You'd want to look more at Be Your Own Bank, Bollinger Bands, and things like that. So you know, that's up to you. But when you come on to, so I'm going to show you some of that today, and where I've marked up charts. So when you come on to the scanner, this is free with the Platinum package, and you can just take the trade as it is listed on the scanner. This is an hourly one for New Zealand dollar, US dollar. New Zealand on holiday today, so it might not move quite as much. I know people say, well, we're still trading, but one half of the currency pair isn't trading. They're not in the office pressing buttons and buying and selling. So it does, I think, affect. I know certainly when the US is on holiday, I tend not to trade now that currency.
I think you've muted yourself, Sarah. I can't hear you.
Sorry about that. Am I on mute? I didn't realize I was on mute. How did I get myself on mute? So on the scanner, share screen again. I haven't drawn this one. This is 157 pips. You can all hear me now? Yeah?
Yes, can hear you now.
Yeah, thank you. So check it's on your own time zone down here. GBP USD, and then what we can do is I'll put the Chris Terry settings on. We can see if it is what he would call a good scan, bearing in mind I've only practiced a few times. I only finished learning it this weekend. You know, we'll go over the geometry ones again. So now just write down these points. So look vertically down where my dotted grey line is, line it up with the X. So that's 17th of April at 1900. And the A point is 21st of the 4th at 1800. The B is the 23rd of the 4th at 1600. C is 24th of the 4th at 10. And our D point is the 27th of the 4th at 0800. So as I say, we can write down the trade here and just compare it. So we'd have a stop loss of 1.25252. And it's important, isn't it, to look at our number of pips that would be here on the stop loss from that D point up to here, 252. So you'd have a stop loss of about 70 pips. Well, if we do the 25 to life on this, which we can also draw today, that should in theory get our stop loss down to the entry point. The D point is our stop loss, which clearly 70 pips, a bit too rich for my liking. I don't ever trade with that kind of stop loss. But if you're a swing trader sitting in trades over the week, a longer period of time or a few days, then that might suit you very well. And it depends on your lot size and account size, and obviously don't risk more than 3% to keep yourself safe. So I'm just writing down these take profit levels. Take profit 2 at 1.23576, and then take profit 3 at 1.22979. So we've got 3 ways we can take this trade. Number 1, we can literally take the trade as it is listed here. Number 2, we can do a 25 to life on it, which is 1 fib setting, which I know some of you know, so we can draw that up because it might not have hit the breakout and the retracement, so that might still be viable because we look at 2 candles to the left or the right of the D, and that has on the hourly, and that has formed there. And then the third way to take the trade is what I will show you, which is an entry off the D point with the Bollinger Bands that Chris Terry talks about, and looking at price action. And then I put on some other indicators for support and resistance and put the trend line on. Okay, so if we come over to that one, and I was in a trade earlier. Let me just see, I finished with, because, yeah, so I got out on an automatic take profit because I was just coming on here at that 10 pips. And I was very lucky. I'd literally just moved my stop profit to that 1 pip there. And it literally did that. So it's come right back down to retest that extension. But it's coming back up to test quarter theory. This is Euro AUD, Euro Australian dollar. So if you have got your charts open and you're looking for trades currently, then I was discussing this with another member. Ignore this fib that I've put on it because that's moved now. And we were thinking of getting back in, but I said I was coming on this. So I'll just move that fib up to there. That's the high up there. And then the most recent low is there. So we have got a rejection off the 88.6 there. So that, in theory, as I say, I want to look at other things, but if you want to do this while we're on, your take profit is at take profit 1. If you have put a fib on, is 1. Take profit 1 at the 0. Take profit 2. Sorry, it's not very well written. 2 at the -27, and take profit. It's a bit slow because I'm on Zoom, on the -61.8. Okay. So you'd want it to clear that quarter theory at 1.68. And ideally what I like to do, if you've got Be Your Own Bank on with the Bollinger Bands, then you'll have a moving average in the middle. So you'd want it to come above that moving average. Just getting rid of those lines. Come above the moving average. Here I've got the 62 moving average. So to get into this would be, where are we? Come above there. It's an 8 out of 10. It is, as you can see, it's quite a fast moving pair. So I don't know if it's going to drop back down again before it decides to go up. But I based that 10 pips first take profit one just before I came on with you guys on this previous high here, and you can see another previous high over there, so round about 10 pips. So there's a sort of trade idea you might want to be looking at, but I want to come to, I said I'd do the Christopher Terry thing, so I want to show you some of that. Sorry if it looks like a pink kind of smorgasbord of colours, but it's just so it was clear to see. So a new scan. Let me hide these old ones. Hide that. Oh, come on. No, just got to get on the thing. Hide that. There we are. There's an old scan coming through. Hide that. And let's come up to current. I think I was looking back to see how old scans measured up with his market geometry class. That's why I've gone back to looking at older scans. That's why I was back in time on this one. I can remove that and take that off, that indicator there. Okay, I'll take those two off. So Monday morning, some of us sometimes don't trade, let the markets settle down. I don't know if anyone here has been on anything this morning or got anything they want to chat about in terms of pairs. Please do if you want to. So let's have a look at this. We're going to be putting this on. Now this is a sell scan because the D point is at the top and there is the entry. So you're looking for reversal points. So it goes X, A, B, C, D. Okay. So we'll come and put that on here. And we're looking, you want to make sure your time zone matches up where you are. So For me, I'm here, Paris, you might be London or wherever you're dialing in from. So we're looking for the 17th of April at, it's going to be something like one of these high points. It's always high to low at 1900. There we are. So come over to your left-hand menu. Make sure you've got the magnet on, because then it'll suck to the ends of the wicks, and come to your little scanner pattern here on the left, and just one click, because you've got 5 points held on the mouse. So you can see with the vertical line at the bottom, it says 17th of April 1900, which is what I've written down. So one click, and you can see it says A, not X, but don't worry about that, because the X is hidden behind the point that shows. So you just want to do one click. So next one's going to be our next low point. Looks like it's got to be that, 21st of April at 1800. And just repeat the process. We're looking for the next high, 23rd at 1600. The C, the next low, is going to be the next low, 24th at 10. And then the D will be the last high, 27th of the 4th at 0800. So once you've got that on, just check that it does look the same. Yes, it does. So you know you've done it. You've done it right, and you can see the points are on. But we need to make sure they're on accurately. If we're going to use pitchforks as trend lines, you don't have to. You can overlay BYOB, but just bear with me, because I know some people do like to. And Sean, a couple of the guys this morning were showing BYOB on the lower time frame entries of 3 minutes to 1 minute. So I was very chuffed to see that. And they mentioned the indicator that I use, which is quarter theory. So I like it. Whoops, that's gone off. I don't know if anyone got into Euroord, but that's gone up 10 pips. So if you are in it, put a stop profit in. This is I like doing the live trading. This is the problem with live trading, because I was discussing with a colleague. He said, should we have another go? I said, yes. But I said, I can't, because I'm about to do live trading. So that's just done 10 pips. So there you are. Exactly. Did it actually retest the quarter theory, or did it go straight up? It went straight up on the quarter theory. It didn't come and retest again, but it had retested over here not so long ago, just only about 5 or 10 minutes, 15 minutes before. So a nice little trade that. As I said, it's quite a fast moving pair. So be wary of it reversing back on you. If I was in this now with the 10 pip alert going off, I would be moving my stop profit to 1.68045 to cover me on the broker commission, and therefore a risk-free trade, and then maybe putting a trailing stop in or closing out one of my lots or half a lot and letting the other half run up to the 1.68235 thereabouts at 20 pips, and take profit 3 is 25 pips. So depending on where you are, if you are in this trade, that 25 pip, it's just moved on the fib, so it is up nearer the 30, 1.68320 thereabouts. So, but as I say, you can see it is a fast moving pair. It does swing back on you, and it suddenly shoots one way or the other. But there are your previous highs on this. So there are your lines of support and resistance, your floors and ceilings. Okay, so that was a good quick little one. Let me just change this to white, which is what I like to have my latest scans in there. And then this is the only fiddly bit, as I always say. It's a bit boring. You get quicker as you go along, but it's worth doing because your pitchforks are valid forever if you get them accurate. So as trend lines. So you can see here that it looks like it's on there, but that is the higher candle. So to be accurate, it needs to come off that point. It's the pitchfork that counts, not the pink pattern. That's just giving you the shape, but I kind of like to put it on. There we are. So that's the D point, and we'll just quickly get the others done.
Sarah, we can't see your screen.
Oh, it says it's sharing.
Yeah, I can see it.
Oh, okay.
Sorry. Yeah, I can see it.
I have enough technical problems without me thinking I've just gone through a wonderful little trade, and we're zooming away, and then I'm not even bloody sharing. Oops, I swore live. Oh my God. Yeah, thank you. So hopefully everyone can see now. So just pop that on there. If you've got the magnet on, it'll put it on automatically. I put the padlock back on because I get scared of actually glitching, you know, moving things by mistake when I'm dragging it along, particularly if I'm on Zoom. The B point doesn't matter so much because it's not a pitchfork, but I usually do line it up. Doesn't take a minute. And then just down here, there's the A, and lastly the, come on, I don't know why that's not going on. I think that'll do on the A. And then lastly the X point here. Okay. And just that, make sure it's on the higher one. Then I like to come down to the object box and lock them on here. Then I know I'm not going to accidentally move them off. So then come back out to the hourly, put it on the, you've got plus and minus for the zoom, whether it's zoomed in. So I put it back on the minus just to get it back to being able to see the whole thing on the screen. And there we are, the scan is on. So it's done a very nice break and retest there. So this is actually selling very nicely at the moment. So we'll put, I think what we'll do first, because it's moving, is put the 25 to life on in case you want to see this one yourself as a trade. So you go to fib retracement, which is under your pitchfork. This one here, which I've got starred as a favorite, I'll have a different setting on, so just bear with me, I'll have to change it. So just, you right click on the line, go to settings, and you can save these as templates. I've got it saved there as 25 to life. So I just need to change it there. And then you need, as it's a sell, that green line is going to be our take profit. So you want you want that furthest away from the D point. So you want to click it onto the minus 0.75. That one's for a buy scan. So take that one off. The 1 is going to be your stop loss. You can take a screenshot of this. The 0.25 is our entry point, and the 0 in white is what we call the breakout zone. So we'll just have a look at that. And you're doing this on the hourly. This is taken off hourly scans. So the 100% is on the D point. That's your stop loss. The breakout zone is the 0, and we're looking to put this at 50% of the second candle from the left or right of the D point, whichever is the furthest away, and that's about there. Now you can put a fib on, but I'm being lazy. Just from the body of the candle to there, I'll measure it 26 pips, so I want it to be about 13 pips here. And that is 13 pips. So that is your halfway point. So what you're waiting for it to do, and I'll give you the figures for the trade, is we want it to, from price, we're looking for it to come down, break out of that zone. I don't know how far it will go, probably to that pitchfork there, and then come up once it's out of the 2 candles to the right, which forms part of the D structure. So actually I should have done it from there. So down to there, up to the blue line, which is where it will trigger a sell limit if you're going to do it as a pending order, but I kind of recommend you start doing them manually. Set an alert near to that line and see if you want to get in manually because of the way the markets are, and then it'll either move up or whatever it decides to do in that zone there, and then come down to your take profit. That's the theory anyway. Okay, so that's what we're looking for. So if we take that off, and let's do the actual trade. So the trade would be a short position for a sell from that blue line. Now, bearing in mind, you're not getting in yet because it has not broken through. It needs to break that structure of the zero. So this is not a trade at the moment until it does that and comes back up. Okay, so let's mark that exactly on that blue line. That looks like it's there. Put your stop loss on the pink line in line with the D. So we've got 28 pips stop loss, and we've got a 38 pip take profit, and that's quite nice because that pitchfork, which is simply a trend line at an angle, it's got Fibonacci in it. It's just the way I do trend lines. You can do support and resistance, so you can do lines across here. Look left to see right. Look at previous highs and lows. That will tell you where price has found its natural levels. But I just tend to draw a trend line instead. And then also I find quarter theory, which, as I say, one of the other team mentioned this morning. These are my lines of support and resistance. So I love the fact we've got a quarter theory. It's every 50 pips. It's an aggressive line of support and resistance, and price therefore has to break that barrier and that pitchfork, depending on where it comes to that blue line. If it comes past here, obviously it'd be above the pitchfork, in order to take us out of the trade. So two nice little barriers there between you and price getting in and being taken out of the trade with a stop loss. So that would be nice. But when you're looking at your take profit level, you will have a stall out at this level at 25 pips, because price will naturally want to stall at lines of support and resistance, in this case that quarter theory at 1.24000. So I would keep an eye on the trade at that area there. You might decide you're going to close out. So your figures for this are stop loss 1.24540, entry as a sell limit, but I suggest you do it manually, having set an alert because of the way the markets are. That's at 1.24260, and then take profit at TP1 at 1.23872. But as I say, please check your trade at 1.24000, because that is a potential floor or ceiling, and price may struggle at that and want to come back up. So if everyone's got that, we'll leave that one. You're waiting for it now to come below there. It may well come to that quarter theory level, because that is at a pitchfork as well, and then turn back up for that entry on that blue 0.25 before coming down to your take profit. And there's nothing to stop you staying in that trade if you've done your analysis, because once it's broken that level, if it breaks it and retests it, then it will want to drop down to TP2 at 1.23500, and then on past that pitchfork. So although that will act as a barrier. So if we look at where the levels are on the harmonic scanner, just put horizontal ray in. The scanner gave us a stop loss of 1.25. I mean, you know, way up here. $1.25252. So let's look at the coordinates. 25252. There. I'm just going to change this line to yellow so that it stands out a bit more on here. Oh, I don't know if it does. I thought it would. So that was your stop loss according to the scanner. Well, the fantastic thing about 25 to life is it greatly reduces that. The scanner gave us an entry of 1 point, and there's nothing wrong with the scanner entries. They're just more swing trading between the levels. 1.24593. So at that virtually 593, virtually at the D point for the entry. The only thing I don't like about that is obviously I've got a quarter theory. So for me, I would never enter a trade just on a sell just above a quarter theory. I mean, why would I do that when I know it's a good line of support and resistance? But you know, it doesn't. I remember being in a trade with Les. I've told you the story before, where he went in much lower than me. We just had different different trading styles and strategies. Mine was equally successful. His was equally successful. He made more pips, and he had got in below a pitchfork and quarter theory because he'd worked it out on the order book. So it's just, you know, it's just your own strategies. And then the take profit according to the scanner, take profit one at 1.23948. And let me just 1.23948. So that's got the take profit there. Well, that doesn't seem much, does it? But that's your take profit one according to the scanner, so kind of in the middle of nowhere. And it's got a take profit two down at 1.23576. Oh, sorry, I've got that one wrong. I need to move that take profit one. That's my mistake. 1.23576. That's your take profit down there. And I've got this one wrong. I beg your pardon. It's my bad. 1.23948. Thought it looked strange. 23948. So just about there. I sometimes find that with the scanner, it's kind of in between my levels. So there's your settings on that one. 23948. And you know, if you're going to go for the quarter theory, you'd may as well go for this the green one. Why would you do the scanner one? Because price will move between levels. This is based on Fibonacci, the 25 to life, which is fractals. It's got maths built into it. So if it's moved past quarter theory, it's going to want to come down to this next level. So in fact, you could take it down to, you know, a bit lower than that to, you know, 1.23820 or something like that, depending on how much time it takes to move down to this line here. And then the next profit level is at 1.23576. Okay, so I won't go and draw the third one, which is the 1.22979. Take profit 3 is right down the bottom near the C point. Okay, so now we've done that, I'll hide all that and I'll show you Christopher Terry's settings in the last part of this session. I'll just hide all those in case you want them or want me to come back to anything. So we'll do it on the hourly and I'll turn off all this other stuff. Oh, I just wonder where those are running through. Right. Interesting. Okay. Turn that off. Turn that off. And let's hide the pitchfork. Hide that. Right. So Chris Terry's settings taken on the 1 hourly. How do you tell if it's a good scan or not? So what he said was that you put on these Bollinger Bands, which you get from the indicators up here. Okay, so that's, you will find that on here. I've got it as part of favorites. It's just called Bollinger Bands. If I searched in here, you'll have this as settings from Kevin's BYOB Ninjacator Plus, and the one with the Bollinger Bands. So it's just that plain one there, Bollinger Bands, which I've put a favorite against. Okay, and you just click on that to load it, and then click it 5 times. So you'll have put it on your chart 5 times. Okay, and then each one you're going to change the settings. Now I'm very sorry, this is where I apologize for how colorful this is now going to look, because it does look incredibly colorful, but I can't help that. So the first one on the settings, you can change these colors to anything you want, but keep them the same, consistent across each one, and turn the background off. Okay, so that's on style. And then what I did on each one was save as default for each one that I put on. Then on the inputs, the first one, you're going to change, I think the length appears as 20, change the length to 50. And then the first one on the standard deviation is going to be 2. So you might want to take a screenshot of that. You can ask me afterwards or write that down. So then save as default and then click OK. So that will be your first one that's gone on, and there it is there. The second one, the settings, again, look, the style I've kept exactly the same, and I've checked off the background. We don't want that on. But for inputs, it's all the same. The only one you're changing is the standard deviation. So length 50, close, and this one 2.5. Save as default. Okay, turn that one on for you. So that puts that second one on. These are the outer Bollinger Bands. The third one, the setting, style, oh, I don't know why that's changed color. No background, save as default. Their inputs is going to be 50, close and 3. So save that, press OK, switch that on for you. That's put the third one on. And the fourth one, style, as we said, inputs with 3.5. That one. And then, and I made the lines a bit thicker, but I might make them thinner. The fourth one, so that you do that just here, you click on the box and it's at the bottom. I made it thicker, but I think they're a bit too thick. I might make it a bit thinner. And then on inputs, this one is going to be 50, close and 4. Okay, so that is your Bollinger Bands, and you can save that as a template, so you don't have to do it across each pair. So now we've got that on, what is it actually telling us? Well, what he says to us, and bearing in mind I'm still getting to grips with this, is that you want price to be deep into the Bollinger Bands, which is here. And then ideally you want the Bollinger Bands, and I'll find you an example just before we go where it works perfectly. You want the Bollinger Bands to constrict at that point, because what it's done is its price has really stretched into the outer Bollinger Bands, and then you want the Bollinger Bands to go wide. Now they are going wide, and it has stretched deep into the outer Bollinger Band, which is good. What you don't want, he says, is where it just slides into the Bollinger Bands. So this looks quite good, I think. But on his example, on his videos, these Bollinger Bands are very, very tight, where price has really stretched it. And then there's a huge, great big lump as the Bollinger Bands have stretched out. Anyway, so that's how he explained it. So if I go back through, I don't know if I'll have any on this particular pair previously to look at that where it will work. Let me just put my magnet on. And let's see, I may have got them hidden. I can't remember. There's one back there. Some of them might be better than others. There's one. I only switch them on if price moves back into them, and then I check that the pitchforks are still accurate. So, but I won't put the pitchforks on. I'm just putting the harmonic scans on that I've saved, so we can just see where we can find what they look like, what's good, what's bad, what's indifferent from using his Bollinger Band theory. Right. So let's move back on the hourly, and he did it on the hourly, just on the hourly. Okay, so here's one here, and the problem with this one, I think, because as we know, some of the scans lately have not been so good, and the D point's been moving. So bearing in mind, clearly I'm not Christopher Terry. I wish I was, but I'm not. I think what he would say about this one is it's not a particularly good scan because it slides into the Bollinger Bands rather than it forming a sharp angle. See how Bollinger Bands here have constricted. I think he likes to see it, certainly the examples I looked at on his videos, very tight on the Bollinger Bands. So what does that actually mean? I think it means less of a price movement than you hoped for. And indeed, what happened here, because this is a sell scan. So if I turn the pitchfork on that one, bearing in mind I've got to find it. Oh, that was a bit of luck. So this is a sell scan, and the pitchfork there, price should actually be moving down these levels. Now, this is not a good scan, so we could have told ourselves that before we got into any trouble by bothering to trade it, by using Christopher Terry's Bollinger Band settings. This one in the middle is like the moving average at 50. He changed it to, yeah, he set it at 50. On Kevin's on BYOB, we have it at 20. So that's your moving average. Price will always come back to that, but you can see actually this scan really failed because actually all that happened was prices moved right up, carried on going up. So the D point probably is now up there. Okay, so that is it in an essence. We'll see if we can find one further back that actually works. Because I did find a few good examples. That's another not good example, because it's number one, it's only reached the first limit of the Bollinger Bands, although it did constrict there. Price, this is actually a scan. You see my pitchforks, so price should have been moving up here because it's a buy scan with the D point at the bottom. Excuse me, but what you can see, it's failed because prices in fact continued to move down. So perfect example where he says some scans are better than others, don't use them if they slide into the Bollinger Bands. That is not a good scan. So now I know his Bollinger Band system. I'm certainly going to be trying to get more confident in learning this. So I think, yeah, do you know what? I'm not even going to get into that one, because even though it broke and retested the D point, which is a confirmation that I used to get in on the 1 minute, it didn't even move up at all. It just carried on dropping. Could have been news that didn't help, but I don't see any very long spikes. So, you know, obviously as it's come from Christopher Terry, it's a very good system. And I think we're just coming up to the last few minutes. So here's another one here, which in fact, often that's a good sign for a scan where one point meets another and it forms the new scan. It's picking the same point on the chart. So that is a that's a D point for a sell. So in fact, what has happened here, although I hide that one. So again, it slid into the Bollinger Bands, kind of bypassed all the outer area, straight into there, but at least it did, again, can I find my pitchfork? Be somewhere around here, I think. No. No. It's that one. Let's just bring that up. So this is the cell scan. It slid into it, but it is at least at the outer, but the Bollinger Bands are not constricted. But it did actually, it didn't break and retest, which normally I like to see before I want to get into a trade, but it did break and retest there. And then it did come down that scan actually. So, but the second scan that we saw that was off this D point didn't hold at all, even though it was in a more constricted area. So that one slid it straight into the outer one, but it seemed to hold. Maybe it's because it's a longer leg going up. So I think some shapes have a higher success rate that suits the scanner more than others. And I've got to look at my old notes or ask Chance on channel 20, who, you know, I follow. Although I don't remember him ever kind of mentioning that, because the scan that came off this one afterwards did not hold at all, which was it that one? No. Let's try one more. Where have you gone? It wasn't that one. I knew I hid it. I can't find it at all. Can't think it's that far back. Can't see where it is. But anyway, you remember what, because we're going to run out of time in a minute. You remember what we were looking at. It didn't hold the buy scan on that one. And then one more here. It did constrict, and that's a nice example where the D point is at the constriction on the Bollinger Bands. Although it looks like a small scan. But it didn't reach the far outer edge. And he likes this to be as tight as possible for the best scan, and then it bulges out. That's mainly the point that he's making. So, you know, I think it's just a question of getting used, you know, and back testing to see what you think, you know, after the event, what has happened with price. There is a D point for a buy. It's slid into it. It's not constricted. And as you can see, price in effect is in consolidation. It doesn't do a lot on that scan. So that's how I'm starting to read this, that he's telling us. This one into the D point, only on the outer edge, not constricted. It does come up past the moving average and again goes into a long consolidation. So you're not getting that sort of strong ping, that boomerang like when you see here where it's very constricted and then it goes wider. So that's how to read them. Here's one on the outer edge, but it's slid into it. It's not that constricted. And again, price is going into a long period of consolidation. So that's how I'm going to start to look at them. you know, to see how far. I think that's what it's all about. Where are we? Just coming up to end of time. I'm going to stop sharing. I can do some more back testing on this. As I say, you know, it's come off Christopher Terry, so it's certainly something I'm going to be keeping to help me decide which scans I'm going to take the trade off, because there are a lot of scans that come through, and you don't need, as we know, you don't need a lot of trades to compound your account and make your growth per day. You know, it's all about you know, perfect trades. Take the ones you know you can win. Wait, patience, and wait for the, you know, wait for the good setups. So I'll just stop sharing there. And thanks very much for joining. I don't know if you've got any quick questions. I don't want to hold Sharon up. She'll be starting now with BYOB at 2 o'clock UK time. See if there's anything in the chat. Yeah, I know, muted myself out. That wasn't so clever. Thank you, Kathy, for your help on that. So I'll say goodbye to everyone, and I'll see you all tomorrow. And that's 2 trades today, the Euro Ward and the GBP USD. So good trading. See you soon. Bye for now.
Thanks, Sarah. That was really helpful.
Thanks, Sarah.
Okay,
Thank you.
bye.
Thank you.
Bye.